Good morning, everyone. On behalf of Vetiva Capital Management and our media partners at Frontier Africa Reports, we would like to thank you for joining us on our breakfast meeting this morning. It is Monday, the 1st of November, 2021. As always, this meeting is being recorded and the audio file may be shared with third parties. The meeting is also being streamed live on our Vetiva online page on Facebook, if you prefer to view from that platform, and the meeting is set to last for 30 minutes. On our agenda today, we'll get a recap of Friday's activities from Symbiot from our Global Equities desk, after which we will move to our partners from Icing Securities with their updates for the Ghanaian markets. Following that, we'll move to Amorige, who will cover fixed income and currencies, and we will conclude with Boston from Frontier Africa Reports and their updates. If over the course of the meeting you do have a question over what our speakers have said, you may drop them in the Q&A box and we will treat them during the question and response session after all speakers are done. Without further ado, we'll start off with Symbiot from our Global Equities desk. Good morning, Symbiot.
Good morning, Dozian. Good morning to everyone. So like you mentioned, I'll be doing a quick recap of the Friday's activities in the Brvm and Nigerian equity markets. And starting in Brvm, where the market closed the week positive, with the composite index gaining 105 basis points on the back of decent performance across board. We had severe Abidjan from the industrial sector closing the day 7.5% up. Followed by sit-up in consumer goods and total Senegal from the oil and gas sector. Weekly sectoral performance was also positive as all sectors closed the week in the green, supporting the bullish trend we have seen so far, with activity level also improving significantly in the last session. Going into today, we expect the bullish trend to continue amid stronger buy-side interests. For the Nigerian market, similar to what we saw in Brvm, the market closed the week positive as the All-Share Index advanced by 18 basis points. And notably, all indices tracking various sectors also closed the week positive, consolidating year-to-date return for the market at 4.39%. So in Friday's session, we continue to see investors trade in line with corporate earnings, with the likes of Guinness closing 10% up for the second consecutive session, while remaining fully bidded throughout those sessions. The stock touched a new year high of 36 Naira 30 kobo, and also returning about 91% year to date. We also saw Total, Wema Bank, and Okomo Oil all gain significant points on the back of their impressive 9-month 2021 results. Speaking to activity level, despite the positive close, market activity in Friday's session contracted. However, comparing activity for the week with prior week, total traded volume improved by 40%, while turnover also did by 21%. So in the last few months, we have seen a consistent improvement in market performance from 1.7% in August to 2.5% in September, and market now posting a 4.3% in October, which could be attributed to persistent demand in the banking space on the back of strong valuations, increased global oil prices both in the oil and gas space, as well as the impressive earnings seen in the later part of the month, largely due to economy rebound. So we foresee this positive sentiment trickling into the new week and the month as investors continue to cherry pick attractive counters across board. However, we do not rule out profit taking in some names that I've appreciated in recent sessions. Thank you, and that'll be all from the equities desk.
Thank you, Symbiot. We will now move to Icing Securities and we will start off with Daniel. Good morning, Daniel.
Hello, can you
Hello,
hear me?
Daniel. Yes, we can hear you.
Yes, good morning, Doze, and good morning to everyone. I'll first start off with the Treasury bill space. Government of Ghana met its targets for the first time in 2 months at last week's Treasury bill auction. It accepted all bids that were tendered as it raised approximately 563 million Ghana cedis. That was about 3 million above the target amount of 560 million Ghana cedis. It issued 91, 182, and 364-day bills. With the yields, 91-day and 364-day bills fell by 1 basis point and 3 basis points respectively to 12.45% and 16.24%, while that of 182-day bill rose by 3 basis points to 13.19% on the day. We realized that the reason why government was able to meet its target was because the target amount was quite low compared to previous treasury bill auctions. On the local currency bond market, the second market was subdued last week compared to the preceding week, with improved selling interest across the belly and the long end of the curve. We saw yields rise between 10 and 15 basis points across the curve last week, as 2025 maturity papers traded around 20.35%. 2029 maturities traded as high as 21%, as investor concerns over debt sustainability looms. On the other hand, Government of Ghana seeks to do a dual issuance this week, a 2-year fresh issuance, and a tap auction for the 5-year paper. We expect a down session today as investors await the pricing guidance for both auctions. And finally, in the Eurobond space, Ghana continued to see kept stiffening last week as the front end paper tightened significantly while the curve adopts a more balanced shape. Yields on Ghana 26 declined by a whopping 150 to 200 basis points, from 11% to 9%. This was characterized by renewed buying curve with boosted pricing. We expect to see the trend continue this week. That's all for fixed income. Thank you very much.
Thank you, Daniel. To Johnson for Johnson.
Hello, good morning, and welcome to another week. In equities, investors in Ghana have been reacting positively to the third quarter financials, which were released last week with advances outstripping losses in the ratio 5:1. Bob led the pack of gainers as it closed the week higher by 13.6% following sustained local demand. Republic Bank Ghana followed as it closed the week higher by 15.38%. Other gainers for the week include MTN Ghana, Enterprise Ghana, and Total Ghana, which increased by $1 each. On the other hand, Fan Milk was the sole decliner for the week as the company's 3Q numbers failed to meet clients' expectations, given a surge in administrative expense from a restructuring that occurred during the period under review. Consequently, the year-to-date return on the Ghana Stock Exchange Composite Index increased by 14.97 points to close the week at 47.5%. Market turnover, however, took a less impressive turn attributable to subdued activity in large to mid-cap stocks. Total value traded was 3.6 million, down by 300% from the previous session. In the coming week, we anticipate increased market activity in banks and telcos following a better than expected earnings season, which saw profits rise year on year and asset quality improve. Thank you very much and enjoy the rest of your day.
Thank you very much, Johnson. We will now move to Amarge, who will cover fixed income and currencies. Good morning, Amarge.
Good morning, Dozie. Good morning, everybody. System liquidity improved significantly on Friday to open at 22 billion negative, coming from the 210 billion negative that was recorded on Thursday. As a result of the increase, despite the increase in system liquidity, interbank rate tightened by an average of 323 basis points on the back of increased funding pressure. as FS retail auction and CRR debit hit the system on Friday. As a result, interbank rate closed at 18% and 18.5% respectively. For today, we expect interbank rate to trade at lower levels as funding pressure reduces. The parallel market traded at 568 naira to $1 on Friday, while the earning window opened at 414.49 naira to $1. The highest trade that was recorded on Friday was 444 naira to $1, while the closing rate was 415.10 naira to $1. Brent and WTI lost about 0.2% and 0.4% to open today at 83.52 and $83.20 per barrel respectively, amid increased supply following China release of its gasoline and diesel reserves. The T-bills market closed last week on a relatively active note as market players continue to take profit on the newly issued one-year paper. That's the 27th October 2022 NTB. We witnessed interest majorly on the special NTB, that's the 29 November 2022 maturity, and some long-dated maturities, especially on the April 2022 and the September 2022 maturities, while trades were majorly consummated on the 8th September 2022, 27th October 2022, and the CBN special NTB. Overall average benchmark rate remained unchanged at 5.29%. The open market ran on a muted note on Friday, with interest seen on the short to mid-dated maturities. Few trades were executed on the 17th May 2022 maturity, as average benchmark rate remained unchanged at 6.25%. The bonds market closed last week on a quiet note as market players closed out their books for the month. Interest were majorly seen on the short and long-dated papers, especially on the 2028, 2049, and the 2050 maturities, while trades were executed along the short to mid end of the benchmark curve, particularly on the 2026, 2027, and the 2036 maturities. Overall average benchmark rate declined slightly by about 3 basis points to close at 11.9% levels. The Eurobond market closed last week on a very active note, with sell-side sentiment dominating both the sovereign and corporate space. The most actively traded sovereigns on Friday were Nigerian 2025, 2027, 2028, 2031, 2032, 2038, 2049, and the 2051 maturities, while the most actively traded corporates were the Access Bank 2026, Access Bank PEP, and the First Bank 2025 Eurobond. For today, we expect the bonds market to continue to trade weak sentiment as investors continue to cherry pick attractive offers across the benchmark curve, while we expect the T-bills market to trade in line with the level of system liquidity. That will be all for fixed income. Thank you.
Thank you, Omariga. We will now move to Boston from Frontier Africa Reports with their own updates. Good morning, Boston.
Yes, good morning, Desi, and good morning, everyone. Thank you very much for coming to start the new week. Quite a bit of stories we're following up. One of these, the top stories anyone needs to keep an eye on is the OPEC Plus meeting, which will be on Thursday. Analysts will be looking to see whether OPEC will, an alliance, and Russia and others will keep to their promise to add additional 400,000 barrels per day to the global market in the month of December. Ahead of that, over the weekend, China released reserves of gasoline and diesel into the market to try and moderate oil prices. So we saw two of the major global oil Brent crude prices, the Brent and the US WTI, taper a little bit over the weekend, but still at the highly elevated level of the top 80s, $83 per barrel, as it were. There were concerns in other news that Nigeria will see the biggest weekly drop in 8 months in the currency market. The Naira traded about 418.55 to the dollar on Friday. So the concerns out there is that the range for the Naira this week might likely head down a little bit for the local currency. Sticking with the central bank story, Saudi Arabia has deposited $3 billion into the Central Bank of Egypt. The idea is to help Egypt support its liquidity. And that's part of the strong relationship between Saudi Arabia and Egypt, which is the largest economy and markets north of the continent. Starting today, as we all know, is the UN climate change conference in Glasgow, the COP26, starting today till November the 12th. Over the weekend, we had a G20 meeting. The world's largest economies met. They're very disappointing climate change deal, which they put together. That will be part of the focus starting today in Glasgow. Everyone can keep one permanent eye on that. As far as the rest of the continent is concerned, if you look at the East Coast, you look at the Kenya Central Bank sold about treasury bills, about 13.9, nearly 14 billion shillings at the weekly auction. We're seeing a number of their own earnings coming through for the 9 months period as well. Some of the news within the Southern African space is how much South Africa will need to meet its own climate change problem, which is one of the largest emitter of carbon on the African continent. Next door to South Africa is Zimbabwe, which is a very interesting story, how the Zimbabwe Revenue Authority, which is the tax authority, were able to raise 117 billion in local currency, Zimbabwean dollar, for the third quarter, a very massive revenue generation via tax, well being reported, because the period of the third quarter was a period of a major restriction as far as COVID-19 was concerned in the country. But what Zimbabwean Revenue Authority did was to earmark about several thousands of new MSMEs, and they taxed them and were able to go after them, and they made massive revenue collection. In the meantime, the central bank in Harare decided to leave interest rates, repo rate at 60%, just to stabilize the currency, which is under pressure, by the way. And that seems to sum it up for us from Frontier Africa Report this Monday. Thank you, everyone. Have a great week.
Thank you, Rustin, for your updates. We have now come to the question and answer portion of the meeting. If you would like to speak, you may raise your hand and we'll give you an opportunity to ask your question, or you may drop your question in the Q&A box and we will respond. I see that Luke has his hand up. Luke, you may go ahead and speak. Thank you.
Thank you, Chidozie, and good morning, everyone. Yes, I just want to quickly speak on the results of Seplat Energy PLC. Last week, the company released its 9 months results. Revenue for the period increased 19% year-on-year to $460 million, while net income came in at $35 million. That was an improvement from a loss of $96 million reported last year. So in the third quarter, right, production dropped significantly. Oil production dropped 42% year-on-year to 1.7 million barrels. And that was mainly due to the force majeure that was declared at the Bocados Oil Terminal. Gas production as well dropped, although at a lower pace. Gas production dropped 6% year-on-year. So as a result of that, we saw an underwhelming performance in terms of turnover. Oil revenue, for instance, declined 1% year-on-year. The reason for the slower pace of decline was because oil prices in the third quarter improved significantly compared to what oil prices were doing year-on-year. So that's in a way helped to offset the decline in production. Then, despite this, we saw improvements in margins because the company was really able to contain some of its major cost line items. As a result, gross margin increased 100 basis points year-on-year to 38%. We also saw a similar expansion in operating margin, which increased from 22% last year to 32% in the third quarter of 2021. But despite this improvement in margins, the company reported a loss in the third quarter, and that was due to the fact that there was a significant jump in taxes. So taxes for the period completely wiped out operating profit in the quarter. Going forward, we expect to see improvement in production, given that the force majeure has been lifted. So what that means is that in the third quarter, coupled with where oil prices are currently, we expect to see a significant recovery in oil revenue quarter-on-quarter, and that should help to drive profitability going forward. Also in line with the quarterly dividend payout policy that was implemented at the start of the year, the company declared an interim dividend of 2.5 cents per share. We expect that same amount of dividend to be declared for the fourth quarter. And then in terms of our recommendation, we've revised our projections for Seplat in light of the weak output we saw in the third quarter. Our new target price is now 775 naira per share. So that gives the stock a hold rating. Then in terms of revenue for the full year, we expect that to come in around, we expect that to increase to about $631 million, while we expect profits after tax to increase to $54 million, which is an improvement from the loss of $85 million we saw last year due to the pandemic. So that would be all on Seplat. Thank you for listening. Back to you, Chidozie.
Thank you very much, Luke. We still have time for questions. So if you have any questions about Luke's presentation on Seplat, you may raise your hand to ask, or you may drop them in the Q&A box, or any questions about anything that's been said today. Thank you. Okay, I see that we have no questions today. That means we've come to the conclusion of our breakfast meeting this morning. On behalf of Vetiva Capital Management and our media partners at Frontier Africa Reports and our guest Icing Securities today, we'd like to thank you all for joining us in our meeting, and we look forward to having you join us again tomorrow morning at 8:30, and we continue to encourage everyone to keep safe. Good morning.